Welcome back, investors, to Ticker Time News. I'm Adam, and the major indices started today's session on a lower note, just as we expected, because the HYG to SPY divergence played out. Now, today, that divergence is growing. Look at the screen. We've got on the top chart, and let me close this out right quick over here to the right. Okay, top chart is the HYG ticker. The bottom chart is the SPY, okay? This is your quote-unquote dumb money versus smart money. Smart money is ticker HYG, which are long-term corporate bonds, and the quote-unquote dumb money, which I find myself in, the SPY, which is the S&P 500. Now, if you look at the red trend line on the top for both of these, okay, we have the HYG up top making this series of, well, a low to a lower high for HYG. But that's not the whole story. The HYG has held up nicely with support directly under it, but that is a decline nonetheless on that trend line. If you look at the same series of days with the SPY directly below it, we have that big run up and that pullback, right? That pullback on the SPY was deeper, and the SPY has been in more of a rally. But that top line, that red trend line, is barely, but it is inclining. This is a divergence where two things do not line up and do not match. They're going in opposite directions. And HYG typically leads the SPY. It's also less volatile than the SPY itself, but it is a quote-unquote leading indicator for the overall broader market. So if the HYG has pulled back significantly more so than the SPY, then you can expect the SPY to do the same in the future. It also works in the reverse. Now, the SPY typically has wilder swings in it compared to HYG, as I just mentioned. But the other thing to note here is if we'd put a trend line on the bottom where support is for both of these, you see the highlighter that I did for HYG up top, it's flat, but for the SPY, it's inclining. So we basically have two different triangle setups here. We have a descending triangle for the HYG, but an ascending triangle for the SPY. Now, let me just go over here real quick to show you chart patterns. We talk about this frequently, so I'm sure you all are aware, but both of them are neutral chart patterns. They're both down here on the bottom. You have the ascending triangle and the descending triangle, right? One has a flat top and an ascending bottom. That's the ascending triangle. That's what the SPY is doing on the daily chart. And then you have the descending triangle where the top resistance line is declining, but the bottom support line is flat. That's the HYG. So even though we have this divergence on the HYG to SPY, which did play out today with the SPY initially dropping off significantly, they're both forming neutral patterns, meaning this market at this moment in time is unsure where it wants to go. The quote smart money and the quote dumb money both are in the same lane where they have no idea where this market should go next. And that's where a lot of market participants find yourself today, unsure. The next week or two will be significant for this market and where it's heading. Microsoft just reported earnings after the close today. I'm going to talk about that in just a moment. I'm also going to talk about the glitch that occurred in the NYSE, or the New York Stock Exchange, today, which could have some traders with profits taken away and traders with losses given back. More on that in just a moment. But understanding this direction, where are we going next? It seems to be a question we asked ourselves a lot last year and are doing the same now, right? Where are we going? It seems to be uncertain. If you ask me, earnings, and I said this a couple weeks ago, I said it last week, I'm going to say it again. Earnings will be our driving force for 2023. See, last year in December, in November, in October, September, going all the way back, the whole year, it was a rough year. It was a year of big losses. Then we saw, at least from October 13th to now in the SPY and the SPX, ourselves starting to dig ourselves out of the hole, but nowhere near being out of a downward pressure on the market. We have bear market rallies. They occur. This could be one right now. I think it is. But last year, we had a real concern with not just the market going down, but one of the reasons the market went down. See, the pandemic, the screen's changing. It's the chart's updating, so just bear with me on that for a moment. Last year, in 2022, before that, we had the big run-up year of 2021, the pandemic money all in the market. Everything, you could hear everyone talking about a big, all-encompassing bubble, an everything bubble, right? That occurred after COVID and everything awful that occurred during it. 2021, investors had a little more money in their pocket. They put it into the market. They bought real estate. You know, the price of everything went up. Inflation was going up too. But 2022 is when it was really noticeable. So now the Fed stepped in 22, raises rates. That gets the market all toiled up and wanting to do something about it. But we also had the dollar, not just yields from the Fed, but we had the dollar making significant moves, putting downward pressure on earnings. Now, the dollar is no longer putting downward pressure on earnings. So in 2023, that's not something we need to worry about. If you look, this is the daily chart for the dollar, ticker DXY. It's been under that 102.5 level since it broke it. Only one time, I should say, to be fair, one time it did close above it, but only one time. So now in 2023, we don't have a strong dollar to worry with. That's in the past. There will be some lingering effects, FX effects, due to the dollar strength as we flush out Q4 earnings, but then it's all done and said. It's all over with. It's done and said. Did I say that right or backwards? Anyways, I hope you get my point. This is not a worry for 23. Another issue with 2022 was after the big everything bubble of 21 from all the COVID money, the markets had to readjust. That's why you saw a lot of companies sink down to their 2019 highs, their pre-pandemic highs. Some companies didn't get there. Apple hasn't gotten there yet, but other companies have, right? If we pull up Meta, I mean, Meta has been performing very well recently, right? Look at this for Meta. It's just been performing phenomenally. I think it's up like 48, 53, something like that % since its low. So that's tremendous. But as I draw the chart back and we start looking further back in time, going further back, I want to get all the way to that 2019 pre pre-pandemic high for Meta platforms, previously known as Facebook. We're almost there. You can see it come into focus now as the chart starts to load. Okay. Now, if we look, the pre-pandemic high for Meta, and like I said, a lot of companies have already gotten here. Meta really got there. This was 2019 into January, February of 2020. Meta's pre-pandemic high. You can see that Meta now is way below their 2019 high. Will Alphabet get this low? What about Apple? Will Apple get there? What about Tesla? Will Tesla get to their 2019 low? Those are all possibilities that we have to ask ourselves. And if they do, that isn't good for the market going forward. But the judge of that, the scale, if you will be earnings. Last year, companies had to adjust to get back to a normal business atmosphere, back to how things were pre-COVID. And that's why I think the market took a big dump last year, because of a strong dollar and because companies had to get back to a normalcy, a new normal that reflected how they were pre-COVID, pre-pandemic. And a lot of companies are now there. So 2023 is not going to be about a strong dollar. It is not going to be about companies normalizing, getting back to some sort of new normal. 2023 is going to be all about two things: earnings and the Fed. How high will the Fed go? I believe 5%. How long will the Fed hold the Fed funds rate at a high level at 5%? All of 2023? Maybe till November, and then December be their first rate cut? Those are going to be drivers of this market this year, which are things that we can actually anticipate. We can't anticipate how companies are going to restructure, change, do this or that internally so they get back to some sort of a normal, a pre-pandemic normal. And that's what caught a lot of investors and market participants off guard with last year. So it was kind of like this one-time thing. We had something big happen in the world, and then we had to adjust to it and then readjust to it. And now we're back to some sort of a new normal where we can depend on fundamentals, on earnings, and we still have to play along with the Fed for a little bit, at least this year. Maybe the Fed will finally get out of our hair in 24 or at the end of this year. I'm hoping for it. Okay, so that's why when we looked at HYG over SPY, they're both telling us there's a divergence of thinking, but the overall thought is confusion. Where are we going now? Okay, I wanted to get that little bit off my chest there. I've been thinking about it for a couple weeks. I just wanted to get that full thought and idea out there and open on the internet. Now, let's talk about the glitch. The glitch is something not a lot of market participants know about, but it took place this morning and it's going to ruffle some feathers. Some profits are going to be taken away and some losses are going to be given back. Wouldn't that be great if we could actually do that in reality? We would all be winners. We would never have a losing trade or a losing investment. But let me put the first one up here. The first one is going to be Walmart. It's not a big one. WMT is the ticker for Walmart. But what really made this morning seem odd and was not expected at all was there was more than 80 stocks affected by a glitch at the NYSE, or the New York Stock Exchange, which caused wild swings in opening prices and stocks. All right, let's get this Walmart chart loaded here. TradingView. You can already see that wild, ridiculous candle there on the daily. Let's get this thing, open it up. Let's go. I don't know why TradingView is lagging today. We've had success since switching companies here. But Walmart, you can see it. There is this humongous wick on top of today's candle. It doesn't seem like it's supposed to be there. Okay. All right. This is the daily view for Walmart, and we have today's candle. The bottom of the wick is down there. The top of the wick is up here at $160, and you can see it closed at $143. So there were some very wild swings this morning. Walmart, NIO, and Nike, just to name a few of them. And this led to almost instant volatility halts, where you couldn't trade the stock at all. So if you were in an opening morning trade in one of these 80 plus stocks that were affected, you couldn't do anything. And no, it wasn't another Robinhood default or problem. This was a New York Stock Exchange problem. These companies in trading, the first 5 minutes right at the open were halted immediately. And market participants were left wondering, what is going on? Now, the official explanation turned out to be a quote unquote exchange-related issue. Now, that issue, fortunately, got resolved quickly, and stocks soon returned to trading as usual. The NYSE, though, will declare a number of trades as erroneous from this morning, and some trades will be busted altogether that traded outside of what they call normal trading bands, according to CNBC. This whole thing was chaotic and a mess, but the SEC is investigating to get to the bottom of this failure. So for future reference, if you see something odd taking place, like price action has moved wildly in one direction, be careful. I don't know what else to tell you. Watch out for oddities like this and stay away from them. Let me pull up NIO's chart, because NIO was also affected. This will be the daily view for NIO. Now, NIO has some volatility. So today's candle doesn't seem all that ridiculous and out of sorts, but it is much larger than previous candles. And, oops, my apologies. That should not be there. Okay, we got it back now. Yeah, let's get this chart pulled up. Now, one thing to help you identify this is, see how big this candle is, right? You would think that there would be a big boost of volume to help push this thing that far. but there wasn't. Look at the volume down here. It's hiding by TradingView's little electric circle here, but it's way, way below average. As a matter of fact, let me open this up and I'll tell you what volume was today. 37.4 million trades took place today. The average is 46.2 million. So volume was down, yet price action moved wildly. And then Nike was another one that I mentioned that I want to pull up. NKE is for you as well. I do want to get your comments in here as well. Huge red candle on Neo. Yeah, it was huge. Now, look at Nike. This is not normal, right? This is not normal. This is huge on low volume. On low volume. Nike opened down this low. What is the price down here? $112 a share. And then it closed at $126 a share. Look, Nike doesn't have candles like that. This is an enormous candle. Now, Nike does have gaps. I'll give you that. That could be similar in size. But as far as day-to-day and candles go, I mean, for Nike, it takes earnings news to move it like it moved today. Now, can you imagine someone this morning who got in on a trade buying Nike down here on this big dip, and then it rises up, and then they close it, and then for the NYSE or New York Stock Exchange or even the SEC to come in, change your records and say, no, you didn't actually make this profit? I would be furious. But on the flip side, if you were in that Neo loss, I think you'd be glad to get your money back. But that's not how the game is supposed to be played, though. We're all supposed to be, supposedly, all on the same side here. So this was just a huge failure and a big mess. A big old mess. Yeah, there was a jump on Snap. Absolutely. A great one. They cheated as usual. It's just wild. Absolutely. Neo is wild. Absolutely. Notice Bitcoin leads stocks a little. You know, that's something that I'm testing right now. Does Bitcoin actually lead where the stock market is going the next day? Because I've noticed a pattern. It's not a perfect correlation, but I have noticed a pattern where if Bitcoin is down like 1%, 2%, 3% before the market opens, like overnight, it's down. I've noticed that it leads the market and the market will be down too. And then if Bitcoin is up, 1, 2, 3, whatever percent overnight, that next day, the market's up. There is a little correlation there. I'm charting it. I'm keeping track of it. I've only started keeping track, maybe about 2 weeks of data right now. However, it's something that I noticed, so I started tracking it. Once I get a good amount of data, maybe a couple months worth, I'm going to share that with you guys here on the live stream. So absolutely. Need a good retracement on BABA before I enter. Yeah, that's been on a wild run. Absolutely wild. BABA is the ticker for Alibaba. It's been crazy. Absolutely. And look at this. This thing was down here this morning to 114, closed at 119. Nice move up, but that was a big gap down. I don't know if Alibaba was caught up in it. It probably was. I mean, that maybe not. Baba does have candles that are equal to what we saw here. But Alibaba is on the New York Stock Exchange, but I don't know for sure if it was caught up in the mess or not. Everything's so correlated hard to get a good play on anything. Yeah, that last year we had that inverse correlation with the dollar, and that helped tremendously to know where the market was headed and to, short the market. But now that correlation is being broken. The market is moving. The dollar's not. The dollar is basically going sideways to slightly down. That 102.5 level, that was my line in the sand. And then, of course, it's almost year-long trend line being broken as well. That was another big red flag that says, this isn't going to hold up. Lots of sideways action caused the DXY 4-hour. Yeah, there is a lot of sidewards moving, a lot of unsure. Meta finally pulled back. Yeah. No notice on YouTube. Yeah, I can't stand that. There's nothing that I can do except to send little requests in here and there saying, hey, YouTube, notifications aren't going out. Can you do something about that? Never hear anything back except a canned response. But there's absolutely nothing I can do about it. Now, if you're on Discord, I know the Discord notifications do come out. Also, our Patreon members, that notification does come out as well. So I don't know how to fix YouTube. I mean, my hands are tied on YouTube. I wish it did better. But I know it does it for some creators that I follow as well. I never get their notifications. Tesla just pulled back, going higher. Yeah, their earnings this week will be interesting. TSLA. Let's see where they are and what they did with that weekly expected move today. All right, where are my lines? Where are my lines? All right, what did you do with them? All right, let me see if I can. Give me just a quick second. I'm pulling up my weekly expected moves. I don't know why the lines aren't on here. I know I went through and put them all there. All right, for Tesla, we have a potential, and I'll put it right here. It is a, okay. Man, why isn't TradingView acting like it should today? Oh my goodness, as soon as it comes up. For some reason, it's not acting like it is. All right, a plus or minus for Tesla this week, 13.51. And that's plus or minus from Friday's close to this Friday. So if I pull this up for the expected move, that, hold on one quick second, that expected move is for Tesla. I'm going to open it up here and I'm going to give you the numbers. Okay. All right. Almost there. Okay, let's go to Tesla. All right. Let's go. All right, let's figure this out for Tesla. So we're at a 13.77 right now. So options market has just took it up a few cents there. So plus or minus 13.7% move for the remainder of this week till Friday. To me, that's not signaling a huge move for Tesla and Tesla's earnings. Okay. Hold on one quick second. Let's just do this real quick. Let me go back to last Friday's, which was the 20th. And what? I'm not even on Tesla. Oh my goodness. I typed the symbols in backwards. No wonder it looked funny. TSLA. Oh my goodness. Oh my goodness. Why didn't you call me out on that? Oh my goodness. I'm glad I caught that. It's still a 13.7 for Tesla there. Maybe I'll get my lines on the screen. Here's Tesla. That looks a lot better. I can't believe I didn't catch that. I can't believe it. All right, up you go. Let's go a little bit higher. Okay, so it's not there. All right, let me go back to Friday's close on the 20th. All right, so it was a $13.70. Oh, okay, here we go. My lines are here. Good, good. I'm glad they weren't knocked off. All right, so if we open this up, we have this ascending triangle, which is a neutral chart pattern for Tesla. It broke out of it yesterday. Yesterday, Tesla tagged its upper weekly expected move, which is at 146. Now we get what looks like a doji candle, where it did tag the upper weekly expected move at 146 today, but then closed down. So a doji candle is one where the body of the candle is really small. It almost looks like a spinning top, except the body is a little bit wider on a spinning top candle. A doji candle basically means indecision. We're not sure where earnings are going to take Tesla. So, you know, sellers and buyers are pretty even on where they open the day and close the day. So that's what we got for Tesla. So, you know, it busting through its upper end of its weekly expected move isn't too far-fetched. I mean, it's up there already. 143, 3 points away from breaking above it. I mean, that could be easy on positive news. I don't know how positive the news is actually going to be tomorrow for Tesla, but we will see tomorrow after the close what it was like. Okay. Yeah, Tesla at 68 cents. Wouldn't that be marvelous to get in on? Man, oh man. I would take those shares too. I can't believe I missed it. Absolutely. You make a good point. Was the 5 p.m. decline due to Russia-Ukraine escalation, something else, or just a weird move? I don't think the market was moving due to any news. I think that it was just pulling back in general. The Qs in the after hour, they did sink. They did sink. I've got too many helping hands here with me. But if we look at the Qs in the after hours, it did move significantly to the downside too. So we got that. Let me get this opened up right quick. All right, while that's loading. Okay, so Tesla's got its earnings tomorrow after the close. We understand all of that. Now, there is back to this market here. I did want to talk about a couple of things related to the market. So we had today earnings come out. that were mixed, all right? And that didn't help the market at all. But one thing that did help the market was the resilience to selling. Resilience to selling. That did help the market. Now, let me open this up to the 15-minute chart. Actually, I'm going to go to the 5-minute chart here. Ticker SPX for the S&P 500. The S&P 500 maintained its posture above that 4,000 mark today, which was impressive. That showed resilience to selling, in my opinion. And with the volatility at the start, you can see it really good on the 5-minute chart right here. There was a lot of volatility this morning. Open down, just like we expected yesterday. But if we were to draw a trend line here, you can see that we obviously made higher lows. But then after we did that, this mark right here, about 4,008, okay, that was held as support. That shows me resilience. That's what it says. It did dip below this trend line here, but you can see it was held there as support for a little bit, 10 minutes or so. It dipped below it here for about 10 minutes. And then if I were to extend that out, it would go something like this. So at the end of the day, we did get back above it, right? So like in the last 10 minutes of the day, we got back above that trend line right there if I extended it out a little bit further, which are two positive things in my view for the market. Closing above that trend line, and after this morning's volatility, holding above that 4,000 level for the rest of the session. To me, that is a positive development for today, because we were talking yesterday about the market being at, a potential top. Now, the market could very well still be at a potential top. Absolutely. And I'm not saying that it's not. But it did break today and get under this bottom trend line support that we had here. But it did get back and close above it. That was, in my view, that was important. Now that that's kind of out of place, I'll take out the support one. But the resistance one is still maintained, okay? Also, the low for today, even though we gapped down, it did not break below the down-sloping trend line that has stopped every major rally for just over a year, okay? So that is a positive. That's a positive. What we want to see, just like TLT had done, ticker TLT, which are some long bonds, once it broke above its long-term resistance, once it broke above its long-term resistance, it pulled back, back-tested, except it took several more days, but it broke out, right? It came back down, it back-tested, and then it bounced off that. If you're bullish on the market, that's what you want to see. And that would allow you to have more time to build out a bigger position to take and ride that rally. Now, if you're bearish leaning on this market, which I'm not out of that yet, but I just think that the market in 23 is going to be very earnings driven, that we could very easily break below this, come up and try to break back above, get rejected, and then fall down. That's what you want to see if you are more bearish leaning on this market right now. So where could it go? That's the big thing. I think earnings are going to be the biggest driver on this market. And we need a couple weeks of that data before this market, I think, is going to really make up its mind and then start moving in more aggressive ways. Otherwise, I think right now it's just going to be smaller sideways moves. I don't think we'll get an extended rally or an extended fall until more data comes out from earnings, because right now we are below the 5-year and 10-year averages with earnings that have been reported thus far. But what is it? Only 70 some companies in the S&P 500 have already reported, so it's not that many quite yet. So we still need some more data to come in. After hours elevator up and down, I think smart money made quick money. Yeah, looking here at the after hours, I wish TradingView could do this, but looking here at the after hours, the Qs, where'd they close at here? In the after hours, the Qs were up to 109. I'm sorry, 190. And then they dropped down to about 185, 186. So it was a big drop down for the Qs. Now, for the SPY, it dropped too. So that, okay. Now, for the SPY in the after hours, it shot up immediately after the close, got up to about 102. So it closed at 400. It got up to about 102. And right now, it's sitting at about 398. So it broke below that very important 400 psych level. And if I look at the ticker SPX to get the S&P on here, it gapped down. Yeah, interesting. Okay. The IWM, which is your small caps, in the after hours, it shot up right at the close. It got up to about 187, so about $1 more than where it closed at. But it's down to 186 right now in the after hours. So everything is red after hours. It'll be very curious then. The HGY over SPY, if that divergence that we started the live stream with, if that divergence is going to play out even more than it did today. I mean, because you look at how the market did today, SPX and the SPY down about 0.1%, the Qs down about 0.2%, the Dow up about 0.3%, the IWM down about 0.2%, so not too bad. All right, does the bonds correlation with or against the dollar right now, any correlation to the dollar looks to me to be broken. Okay. We pulled up the dollar earlier, and throughout last year, the dollar had an inverse correlation with the main index, like the SPY, for example. So when the dollar moved up significantly, the SPY would fall. And the dollar and the 10-year, there was a correlation there for the most of last year. Not all of last year, but most of last year. That seems to have broken, right? The dollar's moving sideways. If we go look at the 10-year, it's not exactly moving sideways. I guess you could probably say, if we put some trend lines on here, and I'm going to do that, it broke out of that channel. But if we throw, that support line, which is not a valid support line at all, because you need three or more contact points for this to be considered a real valid trend line. Now, that resistance trend line, that is validated because we do have 1, 2, 3 points of contact. So we've got a symmetrical triangle here for the 10-year, which is neutral, right? It's neutral. It could break either way. It could break down tomorrow. I mean, the after hours candle is forming below that invalidated support line there. So it's not impossible for it to do so. And then we just adjust the support line to where we can get the connection made. And also remember too, some of the technical analysis is speculative, or maybe it can lean toward one's own biases in the market or with how to do technical analysis. I try to be as neutral as possible when putting chart patterns, candle patterns, and so forth on the charts for you guys. But right now, the correlations, I think, are just completely broken at this moment in time. But the HYG over SPY, which is long-term Treasury and the S&P 500, basically, there is a correlation between them. When there are divergences like there are right now, and I can show you that we started with it, but that's fine. Loading it, putting it up here. Hold on. Okay, there. Let me put this up on the screen again. This is for ticker HYG versus ticker SPY, right? Considered quote unquote smart money versus dumb money. And don't worry, I'm down in the dumb money category right now too, so it's all good. All right, let this load here. And I do want to talk about Microsoft as well, because there's a couple things I want to mention about their earnings report. Haven't read the transcript, but I got a few thoughts on what I saw in the report that I do want to talk about real quick. But first, let me just show you guys this again. Let the lines load on the chart. Maybe if I close that, it'll load faster. If you look over on the right side of the chart, up top is ticker HYG, and then the chart on the bottom is the SPY. So right now there's a negative divergence where the HYG, the quote smart money, it's making a descending lower highs, while the quote dumb money, the SPY, is making a higher high. That's a divergence, something that's not the same. And when you have these divergences, the HYG up top typically leads the SPY. So whatever HYG does first, the SPY comes along and follows what they're doing, right? So if HYG makes lower highs while SPY makes higher highs, Well, that's just telling us that, watch out, the SPY is about to curl over and drop. So we do have to be cautious of that divergence. We called it out yesterday, and it did play out this morning, but now we need to see this thing really play out, because noticing with those two charts, one is making a descending triangle, HYG, while SPY is making an ascending triangle. Both chart patterns are neutral. So even though you have HYG making lower highs and the SPY making a higher high, they're both basically confused on where to go next. That's what it says to me. Okay, let's get this up. How about, let's go with Microsoft next. So I'm going to put Microsoft up here on the chart. MSFT as the ticker. I love the direction Microsoft is going with AI. And I think that is going to be a new paradigm shift for the business community, since Microsoft is really tied up with business. And that actually did pretty decent. So in the after hours, Microsoft initially shot up about 5% or so. The last time I was able to see the data, and let me see if I can't get the after hours data here for Microsoft. I don't know that I can. MSFT. Okay, let's see here. Oh, wow. Oh, wow. All right, so Microsoft closed. Microsoft closed. Oh, why can't I see it? Okay. What, 242, right? It shot up to 254 in the after hours, but right now it's trading at 239. So it's actually that 5% pump that occurred to Microsoft as soon as their earnings were announced, and then it held right around a 3% mark. It dropped really hard. It dropped below the 242 where it closed, and it's currently at 239. That's significant. That's really significant. So it looks like tomorrow could be a down day, an ugly day. Okay, anyways, Microsoft, they reported their earnings after the hours, after the closing bell. Let's pull this up. You can see right here, reported $2.32 EPS, which beat by 1.14%. And then they missed by about $480 million on revenue for Microsoft. But their cloud and Office sales did grow from last year, which was good. Now, the company also emphasized its focus on AI, with plans to develop platforms and tools to help its customers. I guess, what did they say? Do more with less and innovate for the future. I think that's what they said. As far as AI and how they are seeing AI. And this emphasis on AI does align with Microsoft's recent multi-billion-dollar investment in OpenAI, which is the developer of ChatGPT, which I absolutely love. It's great for research. It's great for learning trading strategies. But do remember, the data for ChatGPT only goes to 2021. So it doesn't have fresh data in it about the stock market. So we can't use it for, hey, where you think Microsoft is going, right? Can't use it for that. But I imagine one day that's how trading the stock market will be. You just tell your AI, go make money, and that's what your AI is going to do on the stock market. I can't imagine the rules, how they will change because of that. It's going to, the first one who develops something like that, it's going to be absolutely incredible. Maybe not. Maybe it'll be horrible. Oh, who knows? Who knows how it's going to actually be? But for Microsoft, in the near term, prospects may be at the mercy of macro trends, but the company is taking steps to improve efficiency and is, I think, well positioned to capitalize on key growth trends. Now, Microsoft does trade at, I think, a little bit of a discount to its peers, its software peers. The stock's current value seems to reflect the challenges facing the business. But with efforts to improve margins through, unfortunately, job cuts, restructuring, and its AI investment, I think Microsoft's competitive advantage and long-term growth prospects, I think they look pretty good, making it a potentially good investment by the end of 2023. I'm not sure about getting it now, right? Of course, you can trade it. Of course, you can buy it for swings, even shorter term investments. Or if you're long term and you own Microsoft, continue to add it. Like I said yesterday during the live stream, it is important to be able to buy routinely, hold on companies that you believe in, that you feel are a good fit for you. Make sure to diversify, not with, just all tech companies. Diversify in different sectors. A little bit of physical gold and a little bit of Bitcoin also help. Okay, now getting back to the S&P 500 for just a moment, roughly half of the 11 S&P 500 sectors logged gains today, but moves were modest in scope of either direction. Industrials, which haven't been doing good, actually led the outperformers. It was an outperformer, up 0.7%. Why? Because Lockheed Martin and Raytheon, which Raytheon hit a new 52-week high today, they both reported good quarterly results. Now, also to be fair, 3M was a loser on earnings. Union Pacific, it weighed on sector gains as well. Earnings weren't so great. Now, the heavyweighted communication services was down 0.7. Healthcare down 0.7. Those were the ones that were at the bottom of the pack today. And they did weigh on index level performance. The energy sector was down 0.3% and was also among the worst performers because oil prices fell. I'm curious where oil prices are now. U.S. oil, as the ticker, all one word on TradingView. Let's see what oil is doing here. Looks to be up in the after hours, not by much though. Maybe 25, 40, 20, 33 cents. Oil is up in the after hours a little bit. So maybe we're getting this rollover, and maybe it'll be down tomorrow. Maybe the markets will be. Bitcoin was down a lot, and back to this kind of Bitcoin leading the markets. If we look where Bitcoin's at right now, you can see it pulled back some, right? Earlier, it was down a little bit more than it is right now. It's down about 0.5%. it was down over 1% when we started this live stream right after 8 o'clock. And now it's down to being down 0.5%. So it has pulled up some. So something, knocked markets off a little bit. But when looking at tech, it's still down in the after hours. Microsoft, the SPY, all down in the after hours here. Okay. What questions do you guys have? If you have them, I know we've been going over questions during the live stream, but if you have some, let me know. We'll go over them. Otherwise, I'm about at the end of my notes. I'll go over right now, real quick, just the charts, the SPY, the Qs, and the IWM for you guys. Microsoft, so their guidance was a little weak, but they were really heavy on talking about AI. Now, I haven't read the entire transcript, only just skimmed it, and I saw the AI comments pop up a lot. So I am positive that going forward, it's going to be a bit rocky for Microsoft. It's going to be a bit rocky for a lot of technology companies as we get through Q1 of this year and Q2 of this year. Microsoft is also going to restructure some of its business to be a little more AI forward. Those were some good things that I saw in their guidance. But overall, it wasn't that great, in my opinion. Now, where was I going? I lost my train of thought. Whew. Okay. That's all that I can recall right now from Microsoft without digging into it anymore. But tomorrow I'll talk a lot about Microsoft, more than I did so today, because I will have already read through the whole transcript, what they said on the earnings call. Obviously, the numbers that they print, EPS, earnings, they're important. But to me, the real story is what they say on their earnings call. That's the biggest tell for what they're thinking the company will do. And that goes for any publicly traded company. When they report earnings, to me, the earnings call, that transcript is more important than the numbers that they printed. Because remember, those numbers, they're not forward looking. They're what's already happened. That's why the earnings call and what they say and what they talk about is important. When you hear a company like Microsoft talking about layoffs, talking about restructuring, talking about making investments for the future, then you know right now is not a good time. It's not a good time for the company. It's not a good time in the immediate future. That's what I get out of it. Let's see here. You are very welcome. And that, yeah, expectations have already come down. So you have that too. But with Microsoft, though, if you look at its earnings and where the stock is, it is a little lower, just a few percentage points, but still, it is lower. Maybe by 2%. It's not a whole lot. It's very little when you compare Microsoft to its other peers in the software space. I think I saw a comment here from you guys that said Google looked better, and I don't know what that was referring to. But Alphabet, I think, does look pretty good. It's going to have a rocky time, and it's going to be bumpy for all technology companies for the next 2 quarters. I do believe that. So don't think that the queues are going to start running wildly, even though they have for the start of 2023. But I just think that is getting ahead of ourselves, right? This earnings period, next earnings period are going to be crucial in deciding the direction that these main indices go. Are Treasury tips a good and safe inflation hedge in a recession area? They can be if people are willing to buy them. The question that was posed to me, I don't think it was yesterday, it might have been the day before. It might have been on Monday's live stream about cash. I think Dave asked it, and where to park that cash, where to put that cash so it's actually working for you and not being devalued by inflation. With interest rates up, and I think going higher, especially when the Fed goes up by another 50 basis points to get to that 5% level, 0.25% for February and 0.25% for March to get us there. There are high interest savings accounts out there. They're not bad places to put your money as we go through a recession, since interest rates are higher. So I would suggest also looking at that avenue as well. Looking at those high rate savings accounts. Back when interest rates were at 0, you could hardly get anything in a high interest earning savings account. But now, since rates have gone up, you can. So that's another place to think about for parking your money through a recession. And also, don't forget about tickers like TLC. Let me just pull this up here. So the market, let's call it all the SPY, the Qs, the IWM, the DIA, all together. Let's call it down to 0.2%. This move here was absolutely bonkers. Oops, I didn't mean to do that. Wrong chart. Let's get back to it. Okay, here's TLT. Let me get the highlights out of the way. This is what I talked about earlier in the show, how it back tested it. First, it broke through its long-term resistance, and then it back tested, and then it took off, right? This is what, if you're bullish on the SPY, this is what you want to see. Now the SPY was above. I have to double check to see if it still is here. Above its long-term trend line, you want to see this bounce like it did. It broke through, and this was a long-term trend line. over a year long. It went back into 2021. And then December of 22, it finally broke through. It pulled back. It found support, which is great. Went on a ride, had a pullback. But let's average the main indices together and say they were down 0.2% today. TLT was up 1.4% today. So in a down market, here was success. So I think because of the market cycle, because of us entering phase one of the market cycle, which is contraction, which the ISM market, manufacturing, and the ISM market services, they were both, or they both reported contractions again this month. Now, the contractions were a little less so than they were last month, but they were still in the mid to low 40s. And anything below 50, that is contraction. So being in that contraction phase, bonds are what perform well. Right here. To the left of this chart, I think that's where we are. In this contraction phase, that's when bonds do their best. Stocks, commodities still go down in this phase. So until we start to, find the bottom, is the recession going to happen? How deep is the recession going to be? Those questions really need to be answered before the stock market, the SPY, the Qs, the IWM, the DIA, before they all start to rise and rally. Now, until then, we're going to get some bear market rally, right? But not really a significant, we're back in a bull market rally. Not until, I think, the first 2 quarters of this year get worked out with earnings and valuation of companies. Can't see stage one. Okay. Oh, yeah, I'm in the way. All right. I don't know if I'm going to disappear for just a moment, and then I'll be back so that way you can see the bottom here. All right, I'll be right back. So stage one, which I'm covering up now. I'm sorry, I should have paid better attention. Bonds go up, and then when you look at the top, you can see stocks, commodities go down when we are in this contraction phase, right? When manufacturing is contracting, when services are contracting. And until we reach the bottom of that, which is, right here, and who knows when that is that halfway through this year? Is it, in the second quarter of this year? Is it not until the fourth quarter of this year? I think at some point in this year, we'll reach that bottom, hopefully, right? Hopefully, if we get a recession, it's not terribly deep and dirty and nasty. Maybe jobs just continue to hold up. We hear a lot of layoffs in the technology sector and other sectors, but maybe it's not as bad as feared. And we, reach that final contraction point, and then we start expanding and start moving up higher, and we're back in a bull market. But when we move from stage one to stage two, middle of this year, maybe, and at that point, bonds and stocks do good. Commodities do not. So we have to see that. You're absolutely welcome. I'm glad. I should have done better, but I'll be more careful of that as we move forward. Okay. With the SPY here, it looks like in the after hours, things are just down right now across the board. That doesn't mean that's where we are going to open, but it does add a little bit more to the divergence between HYG and SPY that we are down. I want to look at the SPY and see where that trend line is and where the SPY's current price is. So this, wow, okay. So the SPY got down to 397. It's at 398 right now. And I'm going to say 398 is right where this trend line, the downsloping trend line is. That has stopped every major rally for over a year. But now here we are, day 2, and we're still above it. We still closed above it, which is important. Very important to keep moving on. Okay. So with that, it's sitting right on this resistance line that could be turning into support. I don't know if it is yet, but being down to 398 here in the after hours, it is sitting right on that line. So if we open tomorrow, and again, just because we are down right now in the after hours, it doesn't mean that's where we're going to open. But it does provide a little context for where the market currently is. There was a sell-off, a big sell-off in the after hours there. Okay. So we could be setting up for a move down a little bit lower. Junk Master, glad to see you. Late to the party, no problem. No problem. I'm glad you're here. Hope everyone's trading went well today. Lots of chop. There was range bound, easy in and outs. There, yeah, it was. When we have volatility, don't be scared of it. You can scalp all day long in markets like this. Let me go to the 15-minute time frame because we're not quite connected with that 5-day moving average. I'd count today as like, day 1 of being disconnected from it. So let me adjust this. Oh, come on. For some reason, TradingView is being slow. It's being a little slow for me tonight. It typically does pretty well. Okay. Let me take a couple lines off here so it's not so cluttered. All right. So we got that weekly expected move that it tagged yesterday. And a lot of times when that occurs, you get sideways movement, tagging it that quick right here yesterday. And then today, it's not too bad. This morning, we had that volatility, right? Which brought us back down to kind of back test that year-long resistance line. And there it was. We found support there finally after a year of being underneath it. Can we hold it? That's the big question. It looks like, we're right down back here on it again here in the after hours. TradingView doesn't show that, but that's where we are right now. We're just slightly above maybe where the absolute low was for today, looking at the chart here, but still we're very close. We're volleying on that line. Can we stay above it? That's the big question. I don't know how long we can, but you can obviously see the swings that occurred in the market today, almost like rhythm, right? All right, let's go to the Qs. Well, I didn't want to do that. I want to keep the chart open. All right, let's see if we can get rid of some of these Sharpies. All right. Open this back up some and then go to the Qs. The Qs did just a little bit, 10% worse than the SPY did today. All good. Let me bring this down. The Qs have been on a nice ride. I mean, this is perfect right here. We got expansion, the rally up, and expansion leads to contraction. That's where we are now. We're right in between. This is the 15-minute time period. We are right almost in the middle of this trading channel that the Qs have been in. We tagged the top of it yesterday. So seeing a pullback off of that today is not surprising, right? It wouldn't be surprising if it works its way forward. You know, it'd be great if it could hold above that line, but if it could get back down here and bounce off of that, that would be a nice place to take a short long position in the Qs. I mean, that's down somewhere around 182. Depends on how long it takes to get there for the Qs. But it is in this channel, which is nice. Now, when I go to the daily view, great question. Oh, I'm sorry, I missed this. Before I get to that question, had to sell lots of good positions. Good question here. Can you explain the semis cycle? Everyone is claiming they are back in growth mode, but to me, they haven't gone through the worst. You are correct. That is a great question. Let me explain it. I'm going to go to the semis. Here, let me open this up a little bit. I'm going to go to the semis ETF so you can see the price action that it's gone through recently. That trend line for the Qs for tomorrow, it's down to about 185. Qs need to stay above 185 to be bullish. And the Qs went up to 190 in the after hours, and they're down to 186 right now. So they're about $1 above where that long-term resistance line is at. So if you're bullish, you want to see the Qs maintain 285. If you're bearish, you want to see it break below that for the Qs themselves. Okay, let's go talk semis here real quick. SMH is the ticker for the Van Erik Semiconductor ETF. It's one that we track, and I don't know that I have updated the expected move, and if not, I will do it right now. Let's see, 134.85, 119. Okay, so these are the updated weekly expected moves for semis. Okay, for the semiconductor space, number one, let me just point this out. The weekly expected move, so where the options market prices in, where by the end of business on Friday, where should the ETF, the individual stock, the indice, where should it be by the end of business on Friday, right? And that's what these two lines are. It's an equation based off of option data using like implied volatility, for example. Very forward looking. The top side of that for ticker SMH, again, which is the semiconductor ETF, is 234 on the top side and 219 on the bottom side. Right now, we are above the weekly expected move at 236. And I wonder here in the after hours if that has held or not. SMH. Yes. So far, all right, so with the data that we have here for the after hours, it has held up. Okay, so there was an initial burst in the after hours, but that has been wiped out. So it's basically where it closed right now, which is okay. So typically, once you break above the weekly expected move, whether on the bottom side or top side, typically by the close of business on Friday, you pull yourself right back to being in between those two numbers, okay? And if it were to break out on the bottom side, same thing. It comes right back up to be in between those two numbers. So understanding those two lines. Also, once it reaches a weekly expected move, a lot of times you can expect the equity to just move sideways. It doesn't really do anything. It goes up a little bit, it comes down a little bit, but it stays kind of locked in there. And these are a 1 sigma move, right? So 68% of the time, that's where the entity will be by the close of business on Friday. Okay, good. Now, for trend lines, we have this one down here, which last held as support at the beginning of January. So since the beginning of January, let's go right to January 3rd. We are up 16, let's call it 17%. The beginning of January, it's January 24. So from January 3rd to now, we're up about 17% on semis. That's a pretty big move. And it broke this prior high that was set back here on December 13th. Okay. What we have right now in the semiconductor industry is twofold. In the short term, things are bearish. Things are negative. They're no good. AMD, let's go there real quick. AMD is an example of conflicts, of timing, of where are we going? What is the semiconductor industry doing exactly, right? Well, yesterday, okay, you had an analyst come out and give a very bullish outlook on AMD. AMD shot up. It was over 9%. A big day for AMD. And then this morning for AMD, you get a downgrade from another analyst. So another analyst is looking at AMD and says, wait a minute, this doesn't look right. This looks bearish, in my opinion. Who's right? Yesterday, one says it's bullish. Today, another analyst says it's bearish. What is the truth of the matter here? I think, and this is what I think for all technology, not just semiconductors. In the short term, at least to the middle of this year, there is a bearish outlook for semiconductors and technology. And in the semiconductor industry right now, it's almost like it's going through a transition. Look at Intel. INTC is the ticker for Intel. Intel is building fab facilities. Intel is expanding and doesn't want to be the one to send a spec sheet to a manufacturer to say, build this chip. Intel wants to build the chip. So Intel is expanding by creating fab facilities, manufacturing facilities in the US and looking to Europe. So transition. And when transition occurs, it costs money, right? You have to invest money to build this factory or that factory, or to upgrade your equipment, or to build out your capacity, to bring revenue in. So this is a time of transition for the semiconductor industry, because we're not going backwards with technology. We're only going to go forward, which means more chips. Chips with higher capacity, chips with greater memory. I mean, I can remember when I was a kid and we got our very first computer. Seriously, playing Pong on that computer. It wasn't much of anything, and that dial-up internet was so annoyingly slow. I mean, you could play a game of checkers real quick before you could get on the internet. That's how long it took. But now everything is super fast. Imagine what it's going to be in another 20 years. So the future for semis looks great. But they have to get through this transition period. And then on top of that, we've got the macro picture, which doesn't look good. It shows contraction in manufacturing, in services. The ISM manufacturing report and services report came out today and still shows contraction. So if I could say this in just one or two sentences, it would be this. The short term is bearish for semiconductors, in my opinion, because of transition and because of macroeconomic factors. But the long term, the end of 2023, the beginning of 2024, will be good times, bullish times for the semiconductor space. Because a lot of the transition, the building out capacity will have occurred. And the macroeconomic conditions, which are negative right now, should be turning around. should be getting positive. So short term, bearish. Longer term, bullish when it comes to semiconductors. And for me, at least, technology overall. Because it's hard for technology to flourish when you don't have cheap money for expansion. So remember the CHIPS bill that the US Congress passed? That's going to help companies like Intel, who are building here in the US to expand manufacturing capability. And then there's I guess a curveball. And that curveball would be China. What are they going to do? Do they really think they can invade Taiwan and take over the world's manufacturing capability of chips? I don't think so. The more I think about it, the less I think they would. I know there's lots of talk out there about it's part of China's plan. I just don't know. It would cause a lot of harm to a lot of countries if that occurred. And then the second part of this curveball with China is, are they going to open back up or are they going to close back down? Which way are they going to go? We need a decision. We need to know. Because if China opens back up and opens up fully, then it'll be devouring chips, which will help the semiconductor space to grow. And then there's one more part of the curveball when it comes to China. If their economy is hurting now, will inflation, when they open back up fully, get out of control, then causing things to be too expensive for China? I don't know. That's why it's a curveball out there. But nevertheless, like I said previously, I think the short term, it's not so favorable to semiconductors, but the long term is. Maybe halfway through this year, that's when things will start to turn around and start to improve. At least that's my thesis now. I definitely would welcome y'all's comments on what you think about the semiconductor space and where it's going. Is it bullish right now? Is it bearish right now? What's the short-term outlook versus the long-term outlook? What do you think? I'd like to know what you think there. Cloudy stocks, or maybe it's stormy stocks, equal the stock market of the hour. Love it. Love it. And cheers. Cheers, mate. Right back at you. Absolutely. All right, ladies and gentlemen, it has been an absolute pleasure to be here with you. I think I'm going to go ahead and wrap it up now. We've been live for an hour and 40 minutes. I can't believe these live streams go as long as they do. When I mean let's talk about the market, I always in my mind think, okay, this live stream is going to be about 20 minutes or so, and then it'll be wrapped up. But I can't believe you guys are awesome. Your questions are awesome. I absolutely love them. So with that said, I will be back tomorrow to talk about what happened, why it happened, and what to expect going forward. And we go live between 7:45 and 8 o'clock Eastern every day that the market is open. So thank you again for joining me. If you like the perspective and you want more of it, consider joining our investor community on Patreon. Discord. Links are in the description. I greatly appreciate it. And if you could do me a favor, click that like button. It takes a second, but it does help out the channel. Also, sharing the video with a friend, that helps as well. So thank you, ladies and gentlemen, for joining me today. I will see you tomorrow after the market is closed. And have a good night and good luck tomorrow in the market. Thank you. Good night.